Hello, everyone. Welcome to our live streaming. Cassandra, analyst in HFM, and I'm here as usual to help you with your trading, to help you understand the fundamentals, to go through together the session, actually what we have seen so far this week and so far today, and what is likely to happen next week and in June. We could do some June preview. Sorry, since today is the very last trading day of May, so end of the week, end of the month, which is always important because we are seeing a lot of repositioning in the market, a lot of some taking profit conditions, people closing the positions, they are preparing for the new week. So we have seen a lot of changes, and usually Friday is a profit taking a day, let's say. We haven't seen that much today, but we have seen some important pullbacks, especially in cryptos, in gold, some in stocks as well. But Mr. Trump and the tariffs help with this pullback, but I'm going to come back and explain everything in a bit. So, as you already know, today we have the PCE. Okay, so in general, we have seen a lot of anticipation and cautiousness ahead of the ECB. Okay, it's actually less than 15 minutes from now. I'm gonna put my calendar so you can see my screen as well. Yeah, in general today, guys, the overall picture, I'm gonna share my screen in a bit, it was overnight. Basically, yesterday's session, the US session, we have seen some sharp pullbacks that I said, but since Asia session this morning, there were a lot of consolidations and cautions, mainly ahead of the PCE today. So, as usual, I would like to remind you that this is your session, so please don't hesitate to let me know what you want me to cover, which asset, which time frame, anything you need. I'm here to reply to your questions and do my best to help you guys. Okay, Zibusiso was the very first over here asking about cryptos, and you're actually right, because we have seen some significant movements this week in general, but also there was a nice sell-off yesterday as well. That basically, if I just zoom out a bit, that gave a premature sign of a reversal. But for now, okay, this is the daily picture in the Bitcoin, my dear Zibusiso. For now, this looks to be just a correction because of this 2 months, more than 2 months actually. Yeah, more than 2 months, nearly 2.5 months rally. So you can see that the asset is well supported by my moving average. Let me zoom in so you can see it further. Well supported by, this is my 16 moving average, 16-day moving average, okay? Well supported. So we don't have any indication of a reversal of this up leg so far, but for the time being, it looks more like a correction. Okay, even though, yeah, it seems that intraday the pressure is still on, but we're gonna come back in a bit. Okay, so let me just summarize a bit. What is expected, okay, because the FOMC will be out soon. We have 10 minutes to go. As I don't know how many of you are aware, but guys, occasionally, and especially lately, PC is quite is significantly important for the Fed rather than the inflation number. I mean, they are closely monitor the PCE instead of inflation. So it's quite crucial. So that's why we have seen all this consolidation in general ahead of the PCE today. So I need to make a quick preview actually of what is expected. But nonetheless, okay, just nonetheless, um, the PCE, remember, represents the spending, the personal spending, consumer spending. That's why it's very indicative for the health of the economy. The higher the spending, the healthier the economy is. So people have the availability to gain more, and that's why they spend more. Okay, so that's why, very, very briefly, by the way, that's why it's quite important, and that's why we have seen a lot of caution as I had this today's data, and that's why it's been named as the Fed's preferred inflation measure, because anyway it's an inflation measure. It's indicative for inflation. So today, um, is quite crucial. It usually doesn't cause significant volatility into the market. It's not like a strong market mover, let's say, but it's quite important for the Fed, and it could give us some hints regarding the next move from the Fed, regarding any amendment for its policy. Now, just to highlight at this point that in general, what is expected today is basically to see the figures improving, the PCE figures to improve. Okay, so, and this is something that has already been priced in the markets. Okay, so that's why we don't really expect the markets to react significantly unless if we have any kind of a surprise. However, based on the latest inflation figures, on the latest PPI figures, we should see another improvement in April, and this is what it has been priced in already. Now, let's get a step back until the data are out, okay? So let me just, okay, perfect. Once again, Mr. Trump and the tariffs is the one monopolize the interest and actually monopolize the moves that we are seeing. Okay, so just very okay. So shall we stick? Yeah, actually, let's stick on Bitcoin for now, since Zibusiso asked for it. So, along with, we have seen very similar picture, very, very similar performance with gold. So, okay, this is the daily chart. We have seen for 3 consecutive days on the downside. And if I check gold, guys, you're going to see something quite similar. Not as aggressive, but quite similar. So 1, 2, 3 days on the downside, some bearish candles. So not really massive, but a pullback is a pullback. And one of the many, many reasons, other than the technical sell-off, other than the technical profit-taking conditions that we are seeing, is because of tariffs. Okay, I don't know whether you follow the news, whether you are up to date with the news, but we had an on-off situation basically. This is so, yeah, now I have gold on. Yes, what about gold? You're asking what about gold? So I have gold right now, okay, because there are similarities, even though Bitcoin has been also boosted for other reasons, but yeah, we have seen some similarities. Here I have gold, and yes, in general, it's likely to see gold today. So this is the, let me put the 1 hour chart. Okay, this is the 1 hour chart. So we have seen some lower highs today. That's the weekly. Okay, that's the beginning and the end of the week. That is a bit of an expansion. It's like an expanded triangle. This it looks like. Not ideal, but this is what it looks like. Nonetheless, the whole day we are seeing it consolidating after a bit of a pullback, right? Back to the 32.90, 32.80 territory. And what actually uh, um, affected affects actually affects gold other than the anticipation of the data is also Mr. Trump. I don't know whether you follow the news, but we had the court actually um, um, announcing that Mr. Trump cannot really proceed with further tariffs, but that was pulled back quickly, and he still has the authority to proceed. Basically, it was a bit of a weird situation. On Thursday, we have this actually this announcement, and then yesterday we have seen that the federal appeals the court and gave Mr. Trump a temporary, let's say, reprieve from a ruling threatening to throw out the bulk of the planned levies. And also, we haven't seen any progress between US and China as well. Uh, Basically, we had more of a tension between the two countries this week. It seems that the negotiations have stalled, and this is just causing further uncertainty. So that could eventually support gold. Okay, we need more clarity. We have seen White House announcing that it will start revoking Chinese student visas, and also threatening for more restrictions on the sales of chip design softwares and etc. So tension is back, and all these guys, they could support gold. Okay, I'm not referring only to the intraday picture, I mean right now, today, but what you should expect beginning next week, which is a new month as well. Okay, all this tension and the fact that the negotiations have stalled could help gold, but Bitcoin as well. Okay, so remember that gold is a safe haven. So yeah, so keep that in mind, please. Now, so that's why we said that these week's moves, like the pullbacks, they were more of a technical sell-offs rather than supported from the fundamentals, because the news didn't really support a weak gold or a weak cryptocurrency market. It was more of a less due to the end of the week and the end of the month, to be more precise. Now, okay, what's just a minute to go until the data are out. So that's why I'm gonna zoom in actually to the 30 minutes chart for gold. Okay, so we are seeing a lot of indecision. You can see that this large, really large doji candle and a bit of an improvement right now. The data, let me refresh my economic calendar. Sorry. So let's see. Come on. Okay. Come on. Let's refresh it. And they are out. Sorry for the delay. So, personal consumption slowed down in a headline in the year-over-year basis. Monthly basis in line with expectations. Core also in line with expectations. So personal income increased actually, and quite aggressively. I mean, we had a nice bit of expectations for personal income. Spending is the same as forecasted, so mainly in line with expectations numbers. A bit of a revision higher, a slight revision higher, and the only thing that can stand, the only one that we have seen like a significant difference from the forecast is the personal income, which we have seen increasing at 0.8% from 0.3% expected. So nothing really interesting and nothing that really could change or has changed the overall picture for the US economy or the Fed as such. So unfortunately, or not fortunately, the PCE today hasn't really or shouldn't really change the expectations for the Fed, for the FOMC's next move. So yeah, nothing really changed. The Fed is expected basically to keep rates unchanged. Any rate cuts, any expectations for rate cuts have faded, okay, as a worst case economy scenario and have been priced out already. So no change is expected. Yeah, the any rate cuts for now are being priced in for the end of the year, the very last quarter of the year. So this could provide some ground for the dollar, but because of the tariffs and the trade negotiations, that could be limited ground. So that's why you should probably rely more of your technicals, because from the Fed perspective, we don't see any change in the policy. The expectations are from now onwards is that the Fed will keep rates unchanged for the whole summer, and the expectations for changing and cutting rates, they have postponed for the end of the year, even the very last month of the year. Okay, so from the fundamental perspective, from the macroeconomic perspective, dollar could found some ground due to that, due to the postponement of rate cut by year end. However, now that the Fed appeal court, now that sorry for that. Now that tariffs now that the tariffs threat is back, I mean, he still has the authority to do as his wish. So he still has the option for a variety of tariffs. So you understand that uncertainty is still there. Nonetheless, let's check the our markets. I will try to explain further what's going on with Mr. Trump. So let me just see your questions as well, just to stay on top of your questions. So this is gold, guys, 30 minutes chart, by the way. There's no clarity yet for the immediate for the immediate future. Flat MACD, flat parabolic SAR, consolidations for how many hours now? I mean, plenty. The whole European and nearly the whole Asia session as well. Sorry for that. So even though we have seen that the stochastic over here has a bullish cross, however, all the rest indicators, or the remaining indicators that I have, they are quite flat. So there is no clarity yet. But we're gonna come back to gold in a bit to check it once again. Now, overall, though, remember that my that in general remains on the upside. There was a bit of a pullback, but as long as it sustains a move above 3200s, and more precisely this nice medium-term support area that we have between 3150 3170 territory, there is no indication for a reversal. So that looks more like a correction before another attempt to the upside. And I already explained that from a fundamental perspective, the situation expected to reinforce the demand for gold. So it will be very, very important for you to be well prepared for the open on Sunday. So once the Asia market opens, if I'm not mistaken, Chinese will be on holidays. Okay, but it doesn't matter. You need to keep an eye because, as I said, this pullback and this consolidation today, and in general, the pullback of the week could have been some profit-taking conditions before another attempt to the upside for gold, because all the fundamentals basically support a strong gold. So yeah, definitely the data today have not really helped the traders and the market participants to get any further clues regarding the Fed or regarding the tariff impacts. Actually, if we consider personal income, the increase in the personal income, we could see a slight impact from the tariffs, but not enough to, let's say, change the sentiment into a more positive one. So yeah, other than that, let's move on. Okay, so guys, it's ranging for anyone that is an intraday trader. It's in a range, it's consolidating. So these could act as your immediate support and resistance level, could act as your trigger points for identify a breakout and a reversal back to 3300 territory and 3322 level, or a breakout below today's range could open the doors to 3250 3200 territory. But unless if US session is a bit shaky one, if we see headlines from Mr. Trump, from the US administration, any further news from the US and China negotiation, if things are get quieter today in the US session, then we should probably see further consolidation. But you should always be well prepared. Okay, so today's range could be a nice indication. Any breakout basically outside today's range could be a nice indication for a potential retest of 3212 level as the very next immediate resistance level, or the reversal lower and return back to 3270 or even 3265 level. Now, let me see the question. Sorry for that. I can see, by the way, I don't know whether you have Forex Live in your newsfeed, but I can see that the situation, I mean, the accusations between the situation between in the negotiations, basically, I can see a lot of arguments from both parties, from U.S. trade representative and from the Chinese representative, and things are getting rocky. Okay, clearly, they are nowhere near a deal. I mean, I have seen the U.S. trade representative stating to CNBC that Chinese behavior is completely unacceptable. So we understand that they are nowhere near a deal. So that, guys, is uncertainty. This uncertainty turns into a safe haven demand. So Yeah, there's nothing really positive as far as I can see in the trade negotiations. Um, okay, nonetheless, let's move on. Let's move on. Overall outlook remains positive. Okay, has slowed down indeed, but is still positive. Now, let me see your questions. Who is worrying and why you're worried? Just a second. There are so many questions. Euro, dollar, dollar, yen. Will it drop or rise? Short in dollar, yen already. Let's go. Okay, okay. I cannot tell you what to do, okay? And I can see that a lot of you have already opened their positions, but I cannot tell you whether you have done right or wrong because I don't know what kind of time frame you're trading. I'm not allowed, first of all, but for anyone, guys, that you're saying yes, I should be in a buy or I'm selling already, etc. I cannot really reply on these kinds of comments. Uh, uh, Firstly, because I am not allowed to, but and secondly, because I don't know your strategy. I don't know what time frame you're trading. So if, for example, you are in a 1 minute chart, let's see, in a 1 minute chart, I can see some nice rally. Okay, high candlestick candles, big ones, no tail at the bottom, stochastic was pointing higher. So depends on the time frame of each one of you, so don't get confused from for what others are saying. So if others are saying that, oh, I'm buying, oh, I'm selling, don't like stick on your charts, on your strategy, on your plan, on your type of a trader, because someone could be a 1 minute trader and it could have already been in a buying position because of this breakout. Someone else could have been, I don't know, let's see, um, could have been a day trader, like for example, and been already in a selling position since this morning, actually since yesterday night. Don't I know that you want to share what you're doing with all of us, and you're doing good, and it's quite engaging, and I like seeing what you're doing. But for anyone that hasn't taken a position yet, I want you to stick on what you actually see and what you actually understand, and what not what others are doing. Okay, it's very crucial. This is very important. So I'm gonna go from the top to the bottom. What happened? Gold swings so much. Okay, we have some ups and downs. It was the anticipation of PCE, but um, it wasn't really indicative. Uh, is more the news from China and US are more. I feel that this is what it could boost, or it has like supported a bit gold the last 30 minutes rather than the PCE. Yeah, but PCE was in line with expectations, so it was a bit. Yeah, it was more of a less. More had to do with the headlines that were getting regarding the trade negotiations rather than anything else, I'm afraid. Um, so, questions. I know, hope you're really good, please. Okay, yes, you have mentioned, yeah. Okay, dollar, yen, repo, and Bitcoin. I'm sorry, I wasted your time. Sorry for that. So, as I said, Bitcoin has been in a pullback, but still supported by the 16 day moving average in the daily picture. I zoom in into the 1 hour chart. I can see that this is a 1 minute chart, guys. I'm gonna zoom into the 30-minute chart just to show you that this short-lived support has nearly ended. Okay, why? I can see the parabolic SARS touching uh, the price action, the candles. I can see the very first um, swing shift of parabolic SAR from the top to the bottom. Okay, I can see a change in the color of our Heiken Ash, even though it's a dodgy one, so still waiting for some clarity. But in the 30 minutes chart, I can see that there is a change in the sentiment. So waiting for confirmation, basically, okay? We need to get out of this consolidation. We need clarity. But something has changed. The fact that the parabolics are change side, okay? The fact that we have seen a change on the Heiken-Ashi candle indicates that something is changing. We need clarity. By clarity, we need basically a breakout, either of this 2 hours resistance, either to the upside or off. Let me just be. We'll put it as a line of this latest, let's say, swing low. Okay, it needs to get out. I'm gonna put the 15 minutes chart just to see. Okay, we have this immediate resistance and this support. We need clarity. Parabolic SAR seems that is pushing the price higher. Stochastic, it has a bullish cross. You cannot see it because of the head is of my head. Let me just, no, still no. How can I fix that? No, okay, cannot fix that for some reason. But yeah, waiting for clarity. This candle will close in 12 minutes from now, but the sentiment has changed. However, because of the consecutive lower lows, momentum is still negative, so let's wait and see. Dollar yen, though, many of you ask about dollar yen. I'm gonna come to all of this in a bit, okay? To gold, to Bitcoin, so don't worry about it. Now, yen in general has been like very, very exciting for me the whole year. Now, we have actually a clear reversal, okay? More like it's not exactly head and shoulders, but yes, a clear reversal this week. So actually, it's more than halfway from the rally that we have seen on Monday and Tuesday up to Wednesday. Actually, yes, it's at the 65% reversal. That's why I consolidated, because it was at the golden ratio Fibonacci consolidated. But just here you go. But look at that. Can you see that? We have a pullback, we have a shift of parabolic SAR, and we are wondering, has this pullback run out of steam or not yet? So this is a 4-hour chart, guys. 4-hour chart. Of course, only a break below 143.40 could be the trigger point for the asset to come down to the 142 level. Okay. However, MACD, you can see that it's nearly zero. Actually, it is at zero. So we have a decreasing bullish bias since Wednesday. Okay. That's the 4-hour chart. And indeed, overall, this looks to me, but again, I'm saying that just this is for the overall, okay? This looks to me like a head and shoulder formation. Reminder, this is, oops, sorry. Just for you to have in mind ahead of for next week, okay? Bear with me. This looks to me like a head and shoulder formation. 4-hour chart, dollar, yen, okay? So we are in a pullback right now. So you need to be well prepared for the new month, okay? And I want you to have in mind this zone. It might never happen. It might not happen, okay? Who knows? But you need to be well prepared for June, okay? That's a 4-hour chart, dollar yen. We have seen already a pullback, okay? If the asset manages today to extend below 143.33, the next floor is the 142 level. And for anyone that is a short-term trader, you need to find the half, the between, basically the latest swing low, which is at 142.80. So on the break of 143.40 level, the next immediate support levels are on the 142.80 and 142 level. And for all of you, next week and in generally June, if we indeed see this decline to continue and actually reach 142 level, you need to keep an eye the whole June for any extension below 142. This is when head and shoulders formation will be confirmed, and this is a very important long-term bearish signal. Okay? Food for thought. Now, I'm going to zoom down to the 30-minute chart for anyone that is a scalper, etc., etc., actually into the 15 minutes. So it seems that the pullback is already has already faded. It's already faded. MACD's negative, parabolic SAR are positive, are negative, sorry, but there is a bit of a correction. It could be short-lived one though, because parabolic SAR remains well above the price, which is a bearish signal. MACD is negative, which is also a bearish signal. So we might see a bit of a consolidation, but yeah, overall remains negative. Yeah, remains negative. So let's wait and see. It would be very important to see whether the 143.40 level will break, guys, in the US session. Very, very important. Now, euro dollar, euro dollar, euro dollar. Are you all with me so far, guys? I have seen a comment from you, Matthew. I have seen a comment stating that you're worried, but I don't understand why you're worried. I haven't seen any other comment from you. What's wrong? You can share it over here. I think we are like a small community or something. This is how I feel like, at least, guys. So if I'm wrong for something, just say it to me. I mean, we have a discussion, we have a negotiation, right? We have, like, we're sharing thoughts, we're sharing technical analysis views. So yeah, euro dollar. So let us know whether there is anything that we can help you with. Euro dollar for Richard Grant. Guys, remember, I mentioned that to my webinar as well. Regarding the majors, other than yen, which is we're expecting Bank of Japan to increase rates, and that's another reason, other than the safe haven demand, that's another reason why yen is gaining ground against dollar. But for anything else, right, like euro dollar, pound, is not that we have a strong euro or a strong pound. It's more or less who is weaker than the other, I'm afraid, because both major banks are expected to cut rates. I'm referring to ECB, to Bank of England, to the Fed, etc. but it's a matter, so that's why it's a matter of who is weaker than the other, because we have a really, really weak dollar. So that was also the reason why we have seen euro dollar, pound dollar being in a rally since February. Nonetheless, euro dollar for Rishagran. So that's the daily chart. We have a bit of a rebound, as you can see, was supported by the 50-day moving average, touched it, retested it, reversed it above it, hold gains above 112 level, which is quite important. And actually today it hold some gains above 113 level as well. So overall remains positive. In general, the last 2 weeks were a bit of in a range, but in general, it holds gains. Euro dollar hold gains. Now, let me zoom in. That's the 4-hour chart. You can see that it looks like a channel, which has broken basically, but yeah, it used to be in a channel. It broke it extended and reverted back into it. So I'm gonna change my properties and I'm gonna put array. Why? Because I want to see whether this was a false alarm or not, and whether, because if it wasn't a false alarm, then we're gonna see euro dollar getting back lower. So that means that the channel will no longer hold, and it means that we might see further pressure for euro dollar. This is euro dollar 4-hour chart. So neutral, right? Neutral, neutral, neutral. The last 4 hours reverted all the losses that we have seen in the Asia session. So I'm gonna zoom into the 1-hour chart as well. Let's see. So reverted, held above 113 and is moving up on the upside again. That's a clear rebound, but momentum is very, very confusing. It's flat, but I can see that the fast moving averages are ready to bullishly cross. I'm gonna change, guys. I'm gonna change it into Heikenashi just to clarify whether this rebound will sustain, will remain or not, because we're getting mixed signals over here. MACD and RSI are neutral, flat, indicating that we might see further consolidation. But the price, along with the moving average, are giving some more bullish signals, at least for the intraday basis, for the intraday picture. So yeah, I will switch to Heikenashi one. Okay, that's the 1-hour chart. Let me just put the 30-minute chart. So this is, guys, this is a euro dollar 30 minutes chart, and we have a rally. Okay, we have a rally, 2 consecutive bullish candles with no tail at the bottom, parabolic SAR below the price. So there is some room, limited room though, guys, limited room to the upside. Okay, limited room though. So this is the immediate resistance level. I know that is nearby, but it is. So 113.57, 113.60. Basically, this is the swing low. Only a break above it could open the doors to the 113.85 level. But the last 2 consecutive bullish candles, along with the bullish parabolic SAR, suggest that there is some room to the upside, but limited one. Okay, unless if the asset decisively breaks the 113.60. Okay, so a decisive break above 113.60 could open the doors to yesterday's highs or even Tuesday's highs, 114 level I'm referring to. But for now, it's just many bit cautious. Yeah. Overall picture for euro. Let me get rid of this one. Remains on the upside. So since February, we have seen a nice. Let me just correct this one. We have seen a that is well supported. But as I said, this has to do more with the fact that pound is weaker. Sorry, dollar is weakened than euro. It's not so much about the euro strength. Dollar Swiss. Dollar Swiss. Dollar Swiss. Gonna drag and drop it. Guys, by the way, the euro dollar, at least for 15 minutes chart, yes, is already faded. Yeah, let's wait and see. That candle has not closed, so I cannot say that with clarity, with certainty. Okay, dollar Swiss. Come on. Okay. Okay, still a very, very important barrier. Okay, in the daily chart. It's also a double swing over here. It looks like a tweezer bottom. So very important, the 182 area, 182 and 180, 170 area is a very, very important floor. It looks like a head and shoulder as well, but let's wait and see. There is pressure on the downside. MACD is also negative. And in general, in general, remember, I'm putting the weekly chart just to show you that in general, the overall outlook for dollar Swiss is negative. Okay, so food for thought for tonight's closure and Monday's open. Keep an eye on this area. This could indicate the continuation on the downside for dollar Swiss. It could open the doors basically to historical lows, okay, to lows that we haven't seen since 2011. Okay, so keep an eye on that. Let's zoom into the 4-hour chart, actually 1-hour chart, to see. Yeah, so after the correction that we have seen overnight, after the rebound, it has turned down the last 2 hours, quite big decisive candles. So dollar Swiss is on a downside pressure. Parabolics are down. MACD is a bit okay, it's a bit neutral. Let me check my stochastic as well. Okay, sorry for that. And stochastic oscillator, the 5331. Sorry, my head is in front for some reason. Can you see? No, you can't. Okay, basically it was sharply down. There is a bullish indication over here, but it's not, it's weak. I mean, you can see that the red line is still points down. Okay, so it seems that dollar Swiss is under pressure in the very, very short time frame. So not 82, the round number is the next immediate and very important support level even intraday. So there is a more of a bearish signals over here, and I'm seeing some kind of a like lower highs in stochastic and lower lows. So that's quite another bearish sign. Yeah, this could confirm the resumption of this pre-existing decline. Yeah. Yeah. So 82, here we are somewhere here. Okay. Ali, you can you contact support, please, and they will guide you regarding how you can fund your wallet. There are many ways. It just depends on what you what you use in your country, and in general, it's up to you. But supporting can help you with that. Dollar Swiss is currently in a demand zone. In a demand zone. You mean overall in a daily chart? Yes, it's at a very important support level. But this doji candle yesterday, and if indeed we get a bearish daily candle today, raise concerns whether he will finally break that level. However, he failed breaking this zone repeatedly, actually, since April. So yeah, we need clarity. Just as you're right. Just as you're right. It's in a demand zone, so we could easily see some buying the dip over here conditions, but we don't have such an indication yet. I mean, even if I zoom in into the intraday basis, I can see that this was faded, short-lived, weak, and quickly reversed down. So let's wait and see. Are you sure, Shen? Have you right click show all and it's not there? Please check, and also please let me know which platform you're using. Is it the app? Is it the MT4? Is it the MT5? Let me know. I will check my the comments here. Yes, he did. They did. Yes, they priced it already. You're right. In general, in 2025, and okay, it has been actually general. It's not only this year. I feel that in general, the last few years have been basically COVID. After COVID, markets are like in a constant volatility, anxiety, uncertainty. I mean, there is a lot of things, and markets try to digest. And it's something, yeah, I agree. But this period, yeah, thank God, Mr. Trump and his tariffs. It's like it's a constant surprise. But um, about gold, I can't close those. What do you mean you can't close your position? What do you mean? Oh, you didn't have your target. You didn't have a stop loss or something. Justice, you didn't have your stop loss. Gold, I'm shorting. Oh, guys, you're gold lovers. Every single one of you. I'm shorting on gold. Which time frame, dear? Which time frame? daily one, I guess, because it's on the upside. Intraday is well supported. Yeah, we see some room to the upside. The last 30 minutes, even though it's a bit limited, it looks that it will fade soon. There is no the momentum doesn't really support a rally. Looks like a limited move. Could the third federal courts come back any day soon and stop Trump's power of tariffs forever? I don't know. That caught me in a surprise, to be honest. I wasn't expecting that. I knew that they have the power to put some restrictions, and I was saying, wow, they actually did it. But just a few hours, less than a day afterwards, it was the appeal. So, and I was like, what's going on? I don't really know. I don't know what kind of a game they play. I cannot really tell. I'm afraid, Zibusiso. But what I can say is that don't try to predict politics. That's why we have risk management. That's why we say that risk management is essential. If you have your stop losses, if you have your targets, you don't have to worry what could happen in the politics and in general in the fundamental perspective. That's why risk management is crucial. Okay, because it could save you, let's say, from such surprises or from market noise. You get what I mean? Or at least it could help you limit any potential losses. NASDAQ, of course. NASDAQ. There is some ground for gold, by the way. 30 minutes chart. Bitcoin remains undecisive. No one asked about oil, which is actually in a sell-off. That's oil, 1 hour chart. And let's go to NASDAQ. Shift to NASDAQ, S&P. Where's my NASDAQ? At the beginning of the session, I did mention that there was some kind of the stocks have seen a bit of a like a pressure today. But guys, this is by the way, this is NASDAQ in 1 hour chart. A lot of uncertainty, actually a lot of consolidation. And since the data are out, this might be how Wall Street will end the session today. A lot of consolidation, even MACD flat, and it is negative, but it's flat. If I just zoom to the 15 minutes chart, yeah, you see range, retested the bottom, tried to recover, but it's flat, Leslie. It's just flat. If I put the daily chart, we can see that in general it has been for the last 2 weeks, actually more than 2 weeks, nearly more 2.5 weeks, is struggling to extend above 21,500, okay, to confirm basically a new return to 2025 highs. But on the flip side, it also fails to revert lower. So it's more of a bullish than bearish outlook. The outlook overall for NASDAQ is still positive, but as long as it's failing to extend above and close above 21,500, it remains in a consolidation mode. And you can see that from MACD as well. You can see it solely from the prices. Intraday, though, we have seen a pullback, okay, indeed, but consolidation is still is the case so far today as well. I mean, I'm down to the 30 minutes chart and I can see the same thing. Sideways movement, sideways movement. Um, so I guess a minute chart could be exciting for those that are trading in a minute chart, but that's a really fast environment. There's kind of a support the last 2 minutes. Stochastic point further to the upside, so there is some room to the upside, but this is a 1 minute chart, remember. So yeah, guys, by the way, any questions? I can see that there are no further comments the last 30 minutes. I don't know whether there is a delay or something, but I'm here if you need me. Should we buy? So let me just check the news as well to see whether there is anything new, something that I missed. You remember June is expected to be a really, really rocky month, and in general the summer due to the tariff. So a good idea is to evaluate tonight all the closures, okay, every single weekly candle, every single daily candle, and you are in the assets that you are mostly trading, and prepare for the new week. Alerts at particular key levels, trigger points, put some notes, write down any pattern that you have noticed. Get well prepared because volatility will definitely be back on Monday because it's a new month as well. So, and especially if we have any further development for the trade negotiations over the weekend, this could be also this could boost, actually this could move significantly Monday's open. Let me see. Yeah, okay, I'm gonna get back to oil even though no one asked about it, but there is a very significant drop and it has been in a loss in general this week, okay. This is oil, but I would like basically to just a second. Okay, this is the 1 hour chart, and we had a really aggressive selling the last hour. Just okay. And remember that we have OPEC next week, which is expected, basically, it's expected to announce another supply hike. Okay, so from the one side, we have OPEC, which is expected to announce another supply hike. We have from the flip side the trade tension, okay? So that could eventually actually, let me just zoom out a bit. You can see. Here we go. That could actually fail, let's say, to support oil. Everything depends on what happens in the trade front and on OPEC. OPEC has already unexpectedly increased its supply in that was twice actually, in May for sure, and I think the previous was just a month earlier. So there were some concerns about oversupply. That's when we've seen these pullback, this decline, this sell-off. So now we're expecting for supply hikes. Will they deliver such an announcement or not? So in general, guys, um, that's something that could help oil. But even if they announce like a shorter than expected hike, sorry, actually the hike and the tension, they tend to be negative for oil. Okay, the actual announcement, even though markets should have already priced it in, but the actual announcement in combination with the trade tension, also the whole situation in Gaza right now, should um, uh, push oil lower once again. In general, the oil is in a negative outlook the whole year and expected to continue in this format, let's say, in these um, conditions. So oversupply concerns is really what is driving oil. It was a bit quieter. I mean, we have seen a bit of a steady performance the last 2 weeks, actually since last week. But if you closely seen that, if you closely monitor oil, I will put actually, I will get back my um, Japanese candlesticks, so you can see it. But in general, let me zoom in a bit. That, see, I mean, Maya was a bit of a consolidation, but it's like repeatedly failing to extend higher, and we have some lower highs and lower lows. So they look to be like in a descending triangle, and another more short term one as well. So in general, even though it's neutral like now, if OPEC delivers a supply hike, that could pressure oil back below 60 and could eventually retest 55. So there are a lot of hidden pending orders in oil, especially below 60 level, okay, but also above 64 level. But they are more negative factors than positive factors for oil. Food for thought for next week, guys, okay? Food for thought. And in general, the tariffs, how they affect how they affect oil. They do affect it because they indicate economic slowdown in a global level. Economic slowdown, what does it mean? Less consumption of oil, less demand for energy prices. So that's why we're saying that tariffs are also negative factors for oil prices on top of the oversupply. So this is how in general they are correlated. Guys, if you don't have any questions, I'm gonna call it a date. It's quite, I mean, it's quite dodgy session. Okay, there is some interest intraday in the short term. I mean, 30 minutes chart, 1 hour chart. But it was a bit dodgy. I mean, there wasn't a lot of excitement. Neither gold. You can see that tried to recover, but still, it's still stuck. I mean, failing to extend and to hold performance above 3300s, very neutral. Just check dollar yen once again. Dollar yen still is holding sideways. Yeah, nothing really. It's the end of the month anyway. But yeah, I want you to to be careful for next week, okay? There are a lot of assets that they are at the very important levels. It was dollar yen, it was dollar Swiss. It's Bitcoin as well. It's NASDAQ. is gold as well, actually. Let me see. Yeah, we did mention the 3200s, and we did mention the 3300s as well. Be very careful. In euro dollar as well, we said that it was in an upwards channel, extended below it, and then reverted back into the euro, the channel, and then and currently basically seeing that it's well, I lost it. I have removed euro dollar for some reason, but it was really, really interesting. And next week we have ECB, which is expected to cut rates. Okay, so obviously that was already priced in, but where is it? Come on. Yeah, that was it. That was the channel that I told you about, right? It was in a channel extended below it, tried to revert and enter back to it. It failed, and you can see consecutive candles failing to provide higher highs. And instead, we have a pullback. So it's quite important because it will give us a clue whether indeed it will get back into the channel or whether that was an indication of a reversal eventually on the downside to 112 or even 111 territory. Okay, so a lot of homework. This is what you need to do over the weekend. Thank you very much, guys. I'm gonna call it a date. It's not so exciting unless if you are a 1 minute trader. Take care. Have a great day ahead. And we're gonna speak again on Monday, actually next week. We have more live streamings, we have our webinars, but anyway, you can contact us via social media, and our agents will try to uh, to uh, let us know for anything you need and any help that you need from us. Thank you very much. Have a great day ahead. Take care and see you again next week. Thank you.